The Nasdaq 100 was relatively muted on Monday, as traders brushed off the warning from Moody's on Friday after the close, which put the US credit rating on negative watch. Tesla outperformed and helped the Nasdaq 100 on reports India is considering a request from Tesla to reduce import tariffs as a precondition for Tesla opening a new plant. However, the main event was Tuesday, with the latest US inflation numbers being reported, and the report didn't disappoint. Headline inflation dropped to 3.2% from 3.7% in September, whilst 3.3% was expected. Core CPI dropped to 4% versus an expectation of 4.1%. The reaction is clear from this chart. Both the 10-year and the USD fell sharply, whilst the Nasdaq 100 spiked. As a result, there is even a head and shoulders setup occurring on the 10-year chart, which could fuel further downside in yields. This report has all but eliminated any possibility of the Fed raising rates again this year. The market is now pricing in a 50 basis point rate cut next July, which is why the dollar and yields tumbled. There was follow through on Wednesday with US producer prices cooling more than expected in October. Producer prices fell by 0.5%, which was the largest drop since April 2020. That saw price make a high just shy of 16K, which is the highest level since 19th of July. But price made a topping tail and pulled back. A topping tail is where you get a sharp reversal in price, which creates this candlestick highlighted, suggesting price may be about to pull back. Since then, price has consolidated and remained below Wednesday's high of 15,979. Whilst price is unlikely to breach Wednesday's high as we head into the weekend, the Nasdaq 100 has formed a series of bull flags since the breakout last Friday. If the latest bull flag plays out, we look at the recent high of 15,979 as the first area of resistance. The rally this week has been carried out by the Magnificent Seven, with Tesla the outperformer. These 7 stocks continue to dominate year-to-date performance of major indices, and the weighting of these stocks in the major indices continues to increase as a result. This chart here shows how the big 7 megacap stocks now account for 29% of the S&P 500, an all-time high. A lot of what happens to the major indices will be determined by these 7 stocks, so it's always worth keeping them on your watch list. In terms of levels to watch into the close, upside level is this week's high of 15,979 should the bull flag play out. Above this and we head towards 16,460. However, the likelihood now is a pause after 2 consecutive bull flags playing out over the past week. Support levels are 15,736 followed by 15,520, which we called out as an upside level to watch last week. This is where price consolidated this week before breaking higher on the CPI miss on Tuesday. Next week we have the Fed minutes on Tuesday and one of the Magnificent Seven reporting, with Nvidia reporting results. With that said, thanks for watching. Remember to hit that subscribe button so you don't miss out on future content, and I'll see you at the next one.